10 tips for improving your spread betting. Since the flash crash on May 6, 2010, the stock markets have been very unstable. Some investors at the time even feared a 1930s-style economic collapse. Others hoped and are still hoping for a huge rally fueled by large institutions and corporates starting to spend some of the record piles of cash reserves they're sitting on. Which outcome is more probable? In a nutshell, it doesn't matter to us traders, and we can ignore all this. Here are a few spread betting rules and trading tips to help you better your trading. Have a trade plan. If you don't have one, develop it. A trade plan is basically a system that tells you when to enter or exit a trade. Trade the plan with discipline. Don't wait for confirmation other than your system. Trade with the trend. Let your profits run and cut your losses. Losses are harder to recover than to make a gain. Buy on dips near support, sell on rallies near resistance. Don't chase price. Buying when price is extended increases your risks astronomically. If you miss it or are late, let it go. There's always another trade. Don't force a setup or trade. If you have to make it look good, it probably isn't. Wait for the perfect setup. You may only get 2 or 3 a day, but wait for them. Develop a money management system. Do not risk more than 5% of your capital in any one trade. Deleverage. If you are comfortable investing £2,000 of a £1 share, then bet £20 a point. Don't exceed this just because deposit requirements allow a 10-fold or 4-fold exposure. The more margin you use, the more you'll risk. Start out slow with as few contracts as possible. Build your trading account and capital before you increase leverage. Use stop losses to protect yourself from losing trades. Stop loss orders are useful in that they help to reduce the need to monitor the markets on a continual basis. Set a best and worst profit or loss level for each trade and stick to it. Use a disaster hard stop and a mental close by stop. Guaranteed stops also help to protect against gapping. Be disciplined. Spreads are very different from other trading and take some getting used to. It's so easy to overtrade and have too many positions, as you are likely to find out sooner than later. Greed and fear also get magnified. And finally, take responsibility for your own decisions.